think bookkeeping is something that a lot of investors want to outsource first. It's usually not something they enjoy. So you're going to run into this scenario where you're going to talk to bookkeepers who work with all different industries. It's really common as a bookkeeper to serve a bunch of different industries because at the end of the day, maybe 80% of the transactions, are kind of similar across industries. But I would say there's, that 20% that are really real estate specific that a generalist bookkeeper tends not to understand. Some things like purchase, closing, purchase, refi, sale, closing statements, some things like hard money loans, construction draws, earnest money, things like that. I can't emphasize enough how important it is to have a real estate specific bookkeeper. And I think some questions you can ask a potential bookkeeper to get an understanding of whether or not they're familiar with real estate are, first, how would I record a purchase closing statement in my bookkeeping? And the answer should be, a closing statement might have, 15, 20 lines on it. And really depending on the type of investment, also if it's a long-term rental versus it's a flip, each of those lines are going to be booked differently. So you need to go through one by one and, map it to the appropriate account. That's, the correct way to book a closing statement. And really, you could also ask them along with that, which of these transactions on a closing statement get expensed versus which get capitalized, which will I be able to get depreciation from in the future? So those are good questions. I think another thing I hear all the time is, how do I book construction escrow? My lender is holding these funds for me and I'm getting regular draws down from the funds, but I have no idea how to do the bookkeeping for it. So you can ask that, and the answer is that the construction escrow should be an other asset account on your balance sheet. And as you draw down on the funds, you're decreasing that asset account. And yeah, that's something that should be on your balance sheet. Even if you don't have the cash on hand, it's, set aside for you. So it should be recorded on your balance sheet. And another thing, I think a really simple question is just, okay, can you explain to me what earnest money deposit is and how you would do the bookkeeping for it? So this money should also be another asset on your balance sheet until the point of which you actually purchase the property, in which case that's something that pops up on that closing statement, and then it's credited towards the purchase price of the property. So when you're booking the closing statement, you're also offsetting the earnest money deposit off and taking it off your balance sheet. So those are some questions that you can ask. And then I guess if you already have a bookkeeper and you want to just, poke around in your books and see if they're doing it correctly, I would say here's some red flag things that I see all the time from new clients that we have to clean up is, first, that closing statement example. If you purchased a property or sold a property, did they just take the bottom closing cash line and book it to sales income or, a fixed asset for a purchase price? That's definitely a red flag. It should be representative of the actual purchase price, the actual sales price, and all those other transactions should go to their appropriate asset or expense accounts. I would say another thing you could look for is your mortgage payments. I see all the time that people are just booking them to like mortgage expense, but that's not a full expense that you can put on your P&L. You need to split it up between principal, interest, and escrow. And your principal and escrow are going to go to your balance sheet. Your interest will go to your P&L. And then at the point where your lender pays for your taxes, insurance, that's when the escrow moves from your balance sheet to your P&L. And I think that's another common mistake that I see.